Oh, okay, sorry. Uh, Good afternoon, madam. So we are from Group 8. We will be presenting the analysis of the two companies shown. So we will start with the introduction of the two companies by Movita.
Okay, good afternoon, madam. I'll be going through the introduction of both the companies that we chose. The first one is Xinjiang Shipping, and then the second one is CJ Century Logistics. And I will go on the surface on what Xinjiang does and what CJ Century does. So Xinjiang is their primary business of their company is construction of tugboats, barge, small vessels, ship repairs, and upslipping. So their new Piazzale Slipways built a new shipyard in Kuala Barang due to economic factors and the company growth to accommodate for larger landing crafts, hopper barges to meet shipping needs of its affiliate enterprises. So moving on to CJ Century Logistics. CJ Century Logistics, they are a real estate investment. They offer distribution and real estate investment services, as well as freight forwarding, warehousing, container hauling, transportation, logistics for oil, data management, so on and so forth. Their global customer services is provided by CJ Century Logistics. Moving on to the next slide.
So for our first mode of analysis for the two companies will be the single asset as shown. So from our analysis, we use the variables of the HPR, the HPY, the arithmetic mean, which is the expected return, the standard deviation, and also the coefficient of variance. So from the results, we can see here that SYSC, Xinjiang, had a higher HPR, HPY, and AN. So this indicates that the overall return, if focusing on only the return, it was higher than CJCE. However, even with the higher return, Xinjiang Corporation had a higher standard deviation, which indicates that it has a higher risk than CJCE. So with those two variables in mind, we then went to the coefficient of variance so that we can see the risk to return ratio. And it is found that even with the lower expected return, CJCE had the better risk to return ratio than Xinjiang. So that's for the single asset. So moving on to the portfolio. So for the portfolio analysis, we analyzed a portfolio that consisted of both CJCE and Xinjiang Corporation to see if a combination of both companies in an investment portfolio will give a better return. So from our portfolio analysis, the highest expected return of the portfolio is from a full investment into Xinjiang Corporation, with 100% weightage onto Xinjiang and a zero onto CJ Century. However, as the same as the single asset, it had the highest standard deviation, with the highest, meaning it has the highest risk. However, if the portfolio is fully invested in CJCE, it gave the highest capital asset pricing model value, which the cap or short term CAPM value, it actually shows the expected return of the portfolio that also weighs in the risk-free assets and also the sensitivity of the asset to the market data. So with that, in the portfolio, we found that with the highest capital asset pricing model value, a full investment into CJ Century is the best return. So now we move on to the economic analysis.
So for the economic analysis, as for Xinjiang Shipping, they took part in a relief mission by joining forces with the North Port during COVID-19 to transport more than 10 tons of supplies worth 1.24 million to Kuching. It's the aid for the frontliners and communities affected during the pandemic. With that being part of Xinjiang Corporation's social responsibility, it has caught the attention of investors, which indirectly have contributed to the rise in market share value. Through this series of events, prospective investors typically take notice of a company when its EPS is increasing. So Xinjiang Shipping Corporation has accomplished a remarkable feat by increasing by its EPS from RM 0.015 to 0.12 in just 1 year. Such appears to be a major improvement, even though that growth rate might not be replicated. So moving on to the CJ Century. CJ Century, there's an increase in competition within the logistics sector due to the effect of the supply chain disruption from the lockdown restriction in China due to COVID-19. This in return has reorganized the firm's focus into a pure logistic provider instead. The company has made progress into realigning the company into a logistic-based company by entering an agreement with Astro Malaysia Berhad to provide warehousing and also logistic services in a 3-year contract. Next slide. So as for the industry analysis, beginning with Shenyang, is in progress of acquiring Piasal Gas Sdn Berhad to complement its shipbuilding activities, and it engages in the business of manufacturing, distribution, and marketing of industrial gases. So this integration will help increase Shenyang Shipping's revenue and increase control in liquefied nitrogen and oxygen supply while decreasing the cost of both. So next, for CJ Century, Century's competitor, which is Post Malaysia, has continued to improve its value chain of their courier business through automation of parcel sorting. So through this, Post Malaysia is currently progressing through its 3-year transformation plan, which includes initiatives that will cushion the impact of COVID-19 on the company. However, with this increase in competition by Post Malaysia, CJ Century has opted to withdraw and dispose of its operations in the courier service segment and fully focus on their operation into logistics. This will also help reduce the losses incurred by competing with Post Malaysia by realigning their resources into a segment with less competition. Next slide.
So now the next analysis under the fundamental analysis of the two companies, we will go through the company analysis, which utilizes the financial statements of both companies and running a performance analysis based on the ratios. So we got the ratios from the 3 years of the two companies. So first ratio would be the return on equity. And from the results, we can find that the return on equity for CJCE is superior than SYSC as compared to Shenyang, which means that CJ Century is better at converting its equity finance into its profits. And then the next is the return on assets, where the results is also showing that CJ Century has a better performance than Shenyang Corporation, which means with a higher return on asset ratio, it means that it has a better asset efficiency. Now for the final profit efficiency ratio is the net profit margin. But in this ratio, it's shown that Shenyang Corporation is the better company as compared to CJ Century, which means that with the higher net profit margin, it means that the efficiency of converting their sales into actual profit is better than CJ Century. So moving into the liquidity ratios. So the first ratio that we used was the loan to asset ratio. So from the results, we can see that Shenyang Corporation has a lower ratio than CJ Century, which indicates that the liquidity is higher. So with a higher liquidity, it will with a lower ratio, Shenyang Corporation is less prone to defaults in payments. So the next liquidity ratio is the cash and due over the total assets of the company. And from here, we can see that CJ Century has the better ratio, which indicates it has a better liquidity, meaning it has more cash to pay off its financing. And finally, we can see the capital structure of the company through its equity multiplier ratio. So from here, we can see that CJ Century has a higher ratio, which means it is more reliant on their debt to finance their assets, which is a good thing for a company, meaning that they utilize their debts to fund the operations of the company. So we will move on to the technical analysis of the two companies.
All right, for the technical analysis, looking at Xinjiang Shipping, we'll be looking at the recent 3 years. Although the one attached here is 5 years, but we will be looking at the latest 3 years, which is 2019, 20, and 2021. So as of for Xinjiang, in 2021, there is an obvious drop within a year until early 2020. Meanwhile, in 2020, the chart was inconsistent and with rise and drops until December 1st, 2020. There was a significant shoot up during that time. And based on a news article, Chairman Tan Sri, their chairman, said that the recovery of the shipping sector has generated higher charter activities and driven up freight rates with an increase of 13.4% in the 12 months of June 30th, 2021 as compared to a year ago, which is in 2020. As for CJ Logistics, focusing on the years 2029 and to 2021, CJ Century did face some loss and drop in profit throughout 2019 until early 2020, until before it started rising early on 2020 and continued to significantly rise until mid 2021. The reasoning behind the rise in profit of CJ Century Logistics is because CJ Century Logistics disposes of a loss-making courier unit for 7.47 million. That was picked up from a news article as well. Moving on to the next part.
So coming to the conclusion of our analysis, so we based our result of which company is better on the three factors, where the first is the single asset analysis, where CJCE we find is the more efficient investment. Even though Xinjiang had the better, higher overall return, but CJ Century had the better risk to return ratio, which gives it the better investment choice as compared to Xinjiang. Our second factor was the portfolio selection. So we found that in the weightage, if you invest solely in the CJ Century company, it will benefit you most in the portfolio. This is based off the highest capital asset pricing model value. And the final factor that was used was the company analysis, where we found that CJ Century had the better overall financial performance, where it had a better overall profit efficiency ratios as compared to Xinjiang, and also had the same amount of liquidity as compared to Xinjiang Corporation. And that concludes our presentation. Thank you.
So, what is your suggestion? Which company to invest in long term and short term, and why?
I would say in long term, we would suggest CJ Century because it involves courier and distribution. And we all know for a fact nowadays, there's so many online platforms. Everything is based online, delivery and all of that. So CJ Century tend to go for that in the long run because that is their main. And then while for Xinjiang Shipping, I would say that is for short term because they go big and it's not a daily kind of situation. So when they transport, because they transport two cargoes and all of that, it's a one-time thing. So when it's one time, it's a bit bigger, but then it's much more worth it to invest in short term. Yeah.
Okay. Don, you want to add or no?
To me, I do agree that long term as well, CJ Century should be chosen, mostly based on the three factors that we use, which is the single asset analysis, portfolio selection, and company analysis. However, in the short term, I also would still go for CJ Century as the better option to invest in as compared to Xinjiang, due to the better performance in all the analysis that we conducted.
Okay. Thank you so much. Bye.
Madam.
Thank you, madam.